Why do you think a credit card company would agree to lend people money to buy things before they pay for them? Choose the answer that you think makes the most sense. So, is it because the people at the credit card company are nice? Is it because the company will make money by charging extra money when people don't pay the full amount back on time? Is it because the company wants to keep track of what people spend their money on? Or is it because the people at the company just like to work with numbers? So the answer we're looking for here is B, because the company will make money by charging extra when people don't pay the full amount back on time. So that's when they charge interest on the money. However, in this day and age of collecting information about people, there is some incentive now for companies to make use of the information about knowing what you spent your money on. Question 2. For each situation, tell whether the person is using credit or just getting more in debt, and by how much. So Alyssa bought some games at a store. She paid $59.12 using cash. Later, she returned one game that cost $22.13, but the store did not give Alyssa her money back. So in this case, Alyssa is given a credit that she can use in the store the next time she purchases something. Part B. You asked your sister to lend you $50 to buy a new skateboard. Chances are your sister wants her money back at some point, so in that case, you've incurred a debt. Hopefully she's not charging you interest. Part C says Terry used a credit card to buy clothes for $38.12. In this case, Terry's incurred a debt with the credit card company. And Part D, Chris had a credit card bill for $97.12 and paid the minimum payment of $10. He's made the minimum payment, but he still owes $87.12, so he has an ongoing debt. How would you explain what credit is? Well, we've talked about two kinds of credit. One is the kind where you have the ability to buy something without paying all the money up front and pay out the rest of it over time. Or when you return something, you don't get your money back, but you have a credit, so you have the money that you can use to spend on something else in the store. Kira's older cousin earned $700 a week. Recently, he moved into his own apartment. Think about the things he needs to pay for each month. What amount of debt do you think is reasonable for him to have, and why? So this is a fairly complicated question when it comes down to it, but start off with thinking about the things he needs to pay for each month. Well, certainly needs a place to live, so he's paying rent. He has to buy food. He needs some kind of transportation, so maybe a bus pass. He has a cell phone bill, and then maybe some entertainment expenses. Things like his Netflix account, going out to movies with his friends, and maybe going to dinner with friends. So if we think about how much he's going to spend on each of these items, he's getting paid $700 a week. A lot of these expenses are monthly, so his monthly income is $700, and we'll say typically there are 4 weeks in a month, so he's making $2,800 a month. Sounds like he's got his own apartment. Hard to know exactly what he's paying, but that could be as much as $1,500 a month. Food is maybe $150 a week, so that's $600 a month. Bus pass is, say, $125 a month. Cell phone bill, maybe $50 a month. Now let's just see how we're doing here so far. So far we're at $22.75. So he's still got a little bit of room before he makes his maximum budget. His Netflix account, another $15 a month. Movies, maybe goes out to a couple movies a month, call that $30, and he goes out for one nice dinner with his friends every month, and that costs him $50. So when we add everything up, so that's $2,370. And he makes $2,800. So $2,800 minus $2,370 is $430. So he's got $430 after all of his expenses, and that money could be used to either go into savings or to pay off debt. So if he decided, for example, that he really didn't like taking the bus anymore, he might want to buy a car. So that means he'd have $430 that he could put towards car payments. Now, that wouldn't give him any room for anything else to go wrong. If he had any other expenses that came up, he wouldn't have any margin of error, he wouldn't have any savings. So clearly he shouldn't be spending all of that money on car payments. So maybe he should be having about $230 for car payments and putting $200 into the bank to save.